The stock's whatever, $40, and you sold a call at $50, and the stock goes to $60, you have to sell it at $50. So you're giving up a big chunk of your upside. And this plays on one of the big biases that investors have, which is a preference for income. It's the mental accounting bias where investors separate capital and income. And so there's a huge proliferation now of covered call products where they do that strategy that I just described inside of an ETF. They charge usually a higher fee, and these are being marketed really heavily to investors on the premise that you're going to get appreciation, capital appreciation, and you're also going to get income. But I think my view on this and what I tried to explain in those videos is that you're giving up so much upside that I don't think most investors realize that they're giving up, that the implied cost of these products is enormous.
But when you look at that graph, you see how that can impact your outcome over time.
Fees compound. Any rate of return that compounds over long periods of time can be very impactful in dollar terms. Yeah.
And some people choose to keep their money in cash because most of us are never educated on this subject of inflation and what inflation means. So some of us, we might keep $10,000 under the bed. What do you say to those people?
Yeah, so inflation it's everywhere. It's been around throughout history, and it's probably not going to go away. We have central bank policies in most developed countries that actually target a low but stable rate of inflation. But what it means is that if you have money sitting under your mattress, its purchasing power will decrease over time. That can be very damaging to your wealth. You can maybe keep pace with inflation using short-term government debt instruments, which are going to pay you a little bit of an interest rate. But again, periods of high inflation can cause even that to decline in real value. So one of the best ways to fight inflation for long-term investors, something we've been talking about, is just investing in low-cost index funds to avoid the fee issue and participate in the stock market, which throughout history has far outpaced inflation.